Welcome to October 9th, the Breakfast Club 2025. I hope you guys had a great evening. I hope you had a safe, happy, looking for a little joy in your life kind of night. Let's see where we are in the markets this morning. Okay. So basically we're banging off with the 3 a.m. candle. And we're staying in the lower half of that, which is what I like if we're going to make another run. I want to see us break market structure on the downside. Use this as leverage and then start our little tear down to 108 or 180 to 194, somewhere around there. I want to see a big drop off today. That's what I want to see, but let's see what we'll end up getting. May get a revisit to the top of this. And if we go any higher than 355, I think we're going to take a run on London and Asia's liquidity. That's what I'm going to see up there. So if we get above this level, then we're going to see a run on the liquidity here and potentially a run back into the Asia high as well. We'll see if the 3 a.m. candle holds. And we continue to, all the time we're closing below that, then we'll target the next 3 a.m. candle below us. So I'm going to make sure we are live here. And there we are. Good morning. The Super Six, the 6-pack. Got a 6-pack with us this morning. Good morning. Okay. Where are we off to now? So we're just in this consolidation phase right now. There's a small little tiny ranges. You could probably capture a little internal range liquidity run. But we want to see it get out of here. Yeah, we could potentially run all the way up to 357 and still be bearish. Morning, Hadi and Hans. How are you guys this morning? What's ES up to today? I caught a nice little gold trade last night. I think it's still on. We'll get into that in a second. Change in direction. Box to box. Beautiful box to box in ES for the afternoon yesterday. Really nice box to box trade. And then a box to box again. So we trade through that level. We came back to that level and then extended up to the box again. So it's another box to box from here to here, then from there to there. And then from there, inside this range to here, box. So that was like box, 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 box. Right here. Trade back into it, box, and then right to another box. So you had like multiple box to box trades there yesterday, NES and last night. And it's just compressing. See how it's compressing here? We're running out of little box-to-box trades, and then eventually it's going to burst either higher or lower. So you wait for market structure shift and use the discount box as support to continue your direction. And for res, if you're watching, that box-to-box trade is take profit model 1. Sorry, 2. Take profit model 2. Okay, I wasn't sure about this one last night, so I put a line in here of where I'd like to have seen that get down to see if it would have tagged it. That was after midnight. Let's see if we get a reaction off this. I wanted to see if we can catch the 61.90 last night and go higher. We didn't get it. What are we looking for here? This is like a nice retest. So I want to see that go higher from here. Let's see if this holds all the way down to here. Oh, it's not an inversion anymore. It's reclaimed fair value. Yeah, that's a nice place to see that go higher from there. So Craig, if you're long, others see a nice little long there. 62.58. So looking for this little box up here. That would be my little pocket I'd be looking for the first little trade entry or exit at. Then if you use this little box, we get some leverage on top of it to go higher. Then I'd be targeting 74. We had a little body trade above this level here. We come back inside this last night or a few hours ago. Catch up for a long to the premium box. There's box to box trading. Beautiful and quick. Direct route. I want to see this provide support here. And push higher. You're starting to target this stuff up here. Rejection block, hold highs, and pushing up into this box up here. I want to see this thing take off, but it just what's happening with natural gas. It's just not got much left at all. Real estate's not doing anything. And they're building homes like crazy. here in Canada, so we still haven't seen that take off yet. Get up on top of here. See that gap? Traded up above it. We came all the way back inside it. Now you're targeting up here for natural gas. Look for that target in natural gas. Bitcoin we've already talked about. The HNC looking good. I want to see that market structure shift on the weekly and start pushing that higher. This is my gold trade. I caught this one just perfect. They're here last night in the London low. I kind of preset that spot as a spot to aim for. %50 of that range. I just wanted to catch 50% of it, but I wanted to be just on the other side of 50% of it, like on the little premium side. Give it a little wiggle room. But I would have been almost perfect entry. And I'm just targeting this BSC above this. It's a stress-free trade, so. Let her buck. See if we can get up on top of that liquidity. That's a full fill of that. We're inside this one here now. We'll let that one go and see if that pans out. And little piggies. I'd like to see it get back up into here and then continue coming lower. How's our bonds doing? Kind of back and forth inside the weekly fair value gap. So we'll wait to see where that ends up. You notice how we're on the lower half of this. We had a couple pop up inside there, otherwise we're staying in the lower half. So it feels more heavy to me. Euro. It's got some significant market structure to get through before it goes higher. And the pound. This is a really nice trade in pound. You see this one at 4 o'clock in the morning in London? Look at that. I'm going to take this one so you can see it. It's this last up close candle. Always look for the reverse. The low to be taken. Look for the SIBI. Change your direction. This ran all the way through this one. And our next level. Candle to the left. Grade your response. We want to see fair value gap not close in and use as a breakaway gap. Look, if I take the mean threshold right here, So notice that doesn't get broken. That's your line in the sand. You want to be just a tick below the low. Enter 1, 2, 3. You would have got your just shy of your third entry, first and second entry, continuation. Inside the larger range. Once you break this high, same thing. Trade back into it. And then run higher. That was nice. Those are nice trades there in London. We trade back into this range 50%, create a fair value gap, trade above it, trade back into it, catch in this range. Watch out for your bull trap. It holds for a while, comes back into our discount box, finally runs through the premium, comes back into it. Now we're aiming for this premium here. We want to get through that, find support at the next one, and keep going higher. That's a nice little British pound trades there. Nice pound trades. These are crazy dividends these are paying, and they're paying back in May. I tell you, catch that thing. It's they're wealth makers, man. If you catch them right. We're in a good retracement back inside these ranges now in banks. So we'll see if we start, all the banks start to break their lows. If we break these lows in the bank, then you can start to get worried. I'm going to put that whole thing in there. Then you can start to say, are we on a turn for banks? Immediate rebalance. We're already on the other side of that. So we'll see where this opens today and see if we retest this and start digging into this smaller range here. And missed the DAX. Oh yes, we finally nailed our carrot. 2 a.m. this morning. And then our next objective, which would have been right there, that's been hit. So far, so good. And our next, that's 3 standard deviations. Aim for your 4 standard deviations now. I like the way we're coming back, finding support. The previous deviation, 2, 3, 4. That's good. Let her run. Ali, I hope Ali's got a nice little trade there. They've been kind of suspect, but they keep pushing higher. Gotta love them. Look at that mean threshold of that candle still holding price. Delish. Anyway, let's get back over here. How did the gold do? Yay. Gold hit my objective. That trade's done. Now let's see if we can get up on top of this old highs. If we can get through this level here, we got gold going even higher yet. So that's a quick rest of that internal range liquidity cleaned out. And then we'll see if we just pop above here. And we've got 2 little arrays above us there. So I'll put a little box up there just to see where gold. We'll see if we get through that box. Premium box has been hit. change in direction, little structure change inside here, run through here. Oh, I haven't looked at silver in a long time. I think I deleted that box. I'm going to have to look at silver. Do we have a silver in here? Let's go silver. Wow, I can't even remember the levels that we had on here. Let me see if we got them here. To the next level here. Oh, we just hit it too. There's 3 standard deviations right there from this. Let's see if where 4 is going to be. That's 4. We've been calling silver for months now, since July. I think my upside was 46 bucks or something like that since the last time we talked. that was probably 2 standard deviations. And now you got 3, 4. So if you get a 4 bang out of that, we're at 53 bucks. And I remember looking at silver when it was 11 bucks going, this would be a great time to buy this. 400% return since 2019. Crazy. Didn't they just have another big bank merger down there, like a $16 billion bank merger? All the little banks are getting eaten up. $7. Can you imagine still owning silver after buying it at $7? Not a great return on your money. Depends on whether, if you bought that as a kid 60 years ago. But, you know, you still own it. Oh, good for you. At least you kind of secured a little bit of your future. But you probably bought that when you were, what, 7, 10? Not sure. Young. Yeah, you would have had to have bought it for $7. You'd have to be, that would have been quite a few years ago. And oil is off and running. Traded above it here, came back, tapped it here, keep going higher. Bitcoin got above that level right there. There's your, if you're looking at graded responses right here, we have that fair value gap that forms above this high. And then you get an A+ level takeoff. You see this? Trades down a little bit and then just takes off. You do not get an entry level here. That's A plus level takeoff. Harder to catch because you're anticipating a return to this old high, or just an A level entry, which would have given you this level here to go higher. But an A plus, as you have seen me talk about those A plus level entries in terms of a graded response, that's a A plus level takeoff. Right to premium. Trade above it. Now you're coming back into premium. So when you're looking at the mean threshold of this candle, when you're looking at the mean threshold of that, or the consequent encroachment of the BISI here, you have to include the whole thing here now, because we could come back and retest the whole thing. If we start to eat through that on a close, come back into it, look for another run back into here, and recheck off this little propulsion candle here. So you want to see that, just tap that there. It's a nice little A level entry right there for continuation. Now you've already ran out the liquidity here. You've run out the premium level here. So all you've got is this like immediate rebalance right here, which has now been filled perfectly, which is also, what is this one? Which is this fella over here. Okay, so we're looking for this to get retested and then reverse off of here. And that's what we're getting right now. So now we're already through that level and we're digging into our BISI. So this has to hold for that to go higher, and this needs to break here to start reaching for this next box above us. There's the next box. Oh, you were long in oil? Yeah, it's a, look at that, hey? Retest. Confirmation. Trade above it. Confirmation. Box to box. Trade above the premium box. Look for a retest. Then go higher. This was a nice trade at 9 o'clock this morning, 11 minutes ago. Or 15 minutes ago or so. That was a nice trade. $6.85. $62.85. I bought a lot of Canada silver coin with animals on them. They're cool. It's funny how they always charge you way more than silver's worth for coins that are only apparently worth, like you get a 25-cent coin for like $1 something or $2 and something, like 400% more than what it is, for example. Like it's grossly overpriced for coins that are minted at a certain value. But you know, if you're a coin collector, loonies and toonies, that's right. Yeah, people are escaping to gold. Look at that perfect hold there. So now we're finding it's digging, trying to get up there one more time to push up higher, and it's meeting resistance off of our levels. Like, right, tell me that's not a data point. It's crazy. Crazy. Paid $30 for them a long time ago. Is it 1 troy ounce? If it's 1 troy ounce of silver, then they're worth $20 more than that now. Sorry, yeah, almost $20 more than that now. There's our 4. Oh, we've already said that. Let's look for those here now. See how 50% is just underneath this? So are we going to pop back through that and run higher? Or pop into this and start digging down into 70%, which is 3 standard deviations again? Use that as a little trigger to go higher. Are we going to eat through the mean threshold of that candle, which is the 70% level? And then start digging for this little guy down here. So you're bearish if we get a reverse here. Let's go, big blue bus. There's the retest. I just want to see us get through here. That's what you want to make, Hadi, or that's what you've already made? Well, if you make $2,000 today, beer's on you, my friend. I'm kidding, by the way. Watch this level here. I only got a slight bias in the bearish direction based on the 3 a.m. candle. We're staying in the bottom half of it, so it feels heavy to me. All the time we keep trading below the consequent encroachment of that. We're heavy. Just want to see us break market structure with a clean candle, come back, find some support. I'm just waiting for a break down here and create a fair value gap below here, and then looking for a retest of the fair value gap. So a graded response on that, preferably a retest at this level, and I'd be okay with that for continuation. Well, you see, so if we get I'd like to see a run up initially. This was the same thing we talked about yesterday. I'd like to see a run up initially, clear out some liquidity, even run up above London into just scratching the top of Asia there. Like if we can run up into this area here and then reverse quickly and start running down and clearing out this. I don't want to see this get taken just yet. I want to see us run up here, give a false breakout higher, and then slam it down against everybody, because everybody's looking for this to go higher. This would be a great opportunity to clear out all the liquidity that's formed below here. Would be fine by me. It's into our premium box. You just want to clear out London. I'd love to see a little push up there and clear out London and Asia. There's a little Venom. I think that's a Venom trade right there. You get a BISI and a SIBI overlap. I don't know what his Venom is. I think it's to do with BISIs and SIBIs. It's not exactly the same as ours. And ours came up before his BISI or his Venom. I don't care. Yeah, we're going to wait for something to happen. It's not doing anything yet. That's exactly what it is. What you're seeing is exactly what I'm seeing there, Craig. It's nothing but crap. Not worth playing in. Change of direction, retap that, push lower, look for box to box inside this range here. If you get back through that level, look for continuation. Is this 50% here? I don't think it is yet. Oh no, it is. It's over 50, so that's all it needs here to go higher. So you would have seen this come back up, hit that level, all in one candle, 50% move to break even, take half your trade off. That's a take profit model 1. Done. You were like, whew, good thing I got take profit model 1. I tell you, if you're on the wrong side of it, it's a great way to make a little bit of money and get yourself back in sync with the market. So if that breaks above here at 62.81, use 62.81 to go higher. And your stop loss will sit below this breaker here, or this little propulsion, whatever way you want to look at that. See this one here? That swept and swept. That's going to close above here and here. They're overlapping arrays, so it has to get above there if you want to go higher. All the time this is holding price, I want to see that trade back through here on a close. Use it as support again and start pushing down, dig into this discount box here. Don't limit yourself, Russell. Don't limit yourself, man. If you see this, we get a nice little entry, you might get yourself a little run. Give yourself a little treat for the weekend. It's not long yet. It's still short right here. Hit the premium array nicely. We're reacting off of that. You've got to change. You got a volume imbalance right here. Come back to the volume imbalance and use that to head for a discount down here. Engineering, they just ran above the liquidity here. They're engineering relative equal highs here. get a good rundown, collect up all the people that want to go long here, then pair them up with shorts. So these guys who are short here, you've grabbed them. You want to hold them now and pair them up with these people here, or deeper liquidity, or even this stuff down in here. Because this little box has not even been, oh yeah, it was retested right there. You imagine catching that one? That was a nice little trade right there. I'm going to box the whole thing in here. Watch this level. You got to get back up on top of this to go higher. See how it goes below it, then above it, looking for a mean threshold. See where that wick ends in the next 50 minutes or so. It's just chopping. It's a little meat grinder right now. You're above that level now. This is good. Come back, get some support in here. Let's see if this consequent encroachment, or sorry, this mean threshold here holds price, which is also going to be the mean threshold of this little breaker right here. If you use the whole candle. So 7.2. $0.74 to go higher. I like that. 1, 2, hold, go. We'd like to have seen it tap there at 7.4. It's 7.4.2. Just like 0.2 away from this volume imbalance. And then clear at the top of that. Three more minutes. Let's see what happens. How many people are saying higher on NQ and then lower, or just going straight lower, or lower then higher? What's your thoughts, you guys? What would you like to see? Lower, higher, or higher, lower? You want to see it go lower first, and then we'll go higher, then lower. Gotcha. No more all-time highs. Time for the bear. Well, this is still bullish here. We've bounced off the premium, so this premium is holding right now. So I want to see us get back up on top of that. It's nice that we're using this as support. If you're looking for a candle to trade above that level, that's the one that's just happened right now. So now you want to see this no more than the mean threshold of that candle drop and start pushing. So if you're going to go long, you go long off of this candle and the one tick below the low. But remember, you have reached the premium level. So here you're saying, what objective am I reaching for? I'm reaching for that one, and it's already been hit. So keep your stop loss tight if you're risking that to go higher. One more minute. And we're off. Shimmy shake. Oh, it goes lower first. Goes into the discount. Didn't break it yet. What popped up a little? There's the run into that. I was expecting way higher than that. Oh, look at how that's holding. Is it going to take out all the liquidity here first, then run it higher, then again, don't marry the idea. Just stay on the horse. It's spinning and jumping and kicking right now. Just stay on. Look at that. Totally nails the box. Now go. Let's go. Hasn't taken ours, so still go higher and then take this lot out. Don't marry the idea. Just watch, wait and see. Right now, that's a little seek and destroy inside this whole consolidation right here. That's a seek and destroy both sides of the market. And it's right back into the middle of it. So where do you go? Wait. Let's wait for this open range to set itself up and wait for a macro entry. Like Hadi says, let's all grab something good here. Yes, driving up into our premium box. Delish. You want to see support there, and it's hit it nicely. So it's hit its premium box. It's cleaned out its London high. It's cleaned out the Asia high back into that level. That's what I'm looking for here. Clear out London and Asia and reach into that level there, which is exactly what that's done in ES. So now we've got a SMT. You see that? This one's made higher highs. This one's made lower highs. 15 and 15. See that? So they're just running out liquidity here. Now if this starts to really book it back down, and this one's holding price, it just does not want to make new higher highs. That's an SMT. So we'll see if we start trading back through here. And that was all you needed. Just that little run up into a premium mean threshold. Don't chase it. Just wait. Good morning, Derek. We've traded below that level now. There's the retest. Come lower now. I'm going to try a short right there. First presentation. It takes out the low, then I'll go to break even. I'll go to break even now. Come on, give me my freaking stop loss. It won't let me move my stop loss. Look at that. See, look, trying to get my stop loss. Come on, give me my damn stop loss. Look at that. Here, now that'll let me move it. I've only got one on there, so I got to go to break even, so it'll take me out now. And there's a delay in this trading view now. Look at that. It's already gone through my stop loss, and it's still finally. So far, we're retesting this first presentation, looking for this to continue coming lower. We can come all the way back up into 322. All the way back up inside this. It's fair game. If we get back through here and start to climb above these two candles, then I'm looking for a long. But otherwise, those are bouncing off of key levels there. You want to see that reverse and come back lower. And we're already eating through the top of this level here now. So now this is turning bullish inside this range. If we get a close above here. So far, you're still inside it, so still bearish. No body above there, still going lower. Okay. What have we got left? There's nothing really over there, hey? You get market structure shift. See if you got to get below here. Come back inside there. Still bearish. You see where I know you're looking for that to go long, Hadi, but we came back below this level. You traded back inside it, and we wicked through it, but we did not get a body through it. So it's still bearish inside this inversion. You want to see that hold price and go lower. You don't just look for the continuation. It wouldn't be till you see this break to the upside and then take out the premium candle to the left, which would be this one, and they're practically overlapping, so take the whole thing. So market structure shift because it's late inside that range. Now we're going lower, and unfortunately that's enough to throw me off. I wanted to see that hold, no wicks. So now you've got retest of the low. It's already done. Body traded below it here, came back, retested it there. Now we're going lower. Just wait for the macro at 950. You may still get a run higher at the 950 macro. You may start to see a swing here, and all that liquidity sitting above us here, run that out, take it out, then drive it down. This could be just a big seek and destroy type of morning. What's gold up to? See how that's holding, Russell? Watch those premium arrays, and if that premium array's got to get broken to the upside, where that small little fella went below it, then it went above it, it came back. We thought it was going to give it some support. We still got to get through here. It did not. Finally broke down through here. Body breaks below the low, comes back into it. We're pushing lower now. Looking for this discount level here. You get through that level, look for a run deeper. Just stick with the rules. Stick with the rules, or whatever your rules are. Where did my little mouse go? Did I just lose my mouse? I think I just lost my mouse. There we go. There, we're back. Yeah, you look at the 4 hour, I want to see that close below that 291. See, we would have caught a massive freaking run here now. This is what I wanted to see today. Shit balls. Wicks got me again. They got me again, you guys. They got me again. This breaker here, you see how that breaker, look at that right inside that breaker, it held and ran. This level held. Bodies respected it, ran. Sight candle got me out. Bastards. It happens. I was happy with the gold trade. Gold trade did fine. We weren't too far off of the big objective there. Look at that nice little retracement now. Oil, what's that up to? Nice retest. Ran lower. That was our discount box. Box to box, we talked about that. Finally hit it right here. We ran through it. Now you want to see this level hold, just like we just saw, right? Come back into it, but then it popped through. Now we're using this to go higher inside the range. So there's your first presentation for value gap on a 1 minute. It's just tapping it now. You want to see that run higher. Now I want to see it run higher than here. So are you long in this now, Craig? That would be my upside objective. Clear that out and then run the highs out. There's your entry. And if you're not in it, don't chase it. Wait for those moments, man. Wait for those key moments. Like that. And then let it go. We're coming up for another 6 minutes for the macro. So the problem is now this could be, I want to see a nice little macro retracement back into 290, the 290 level. Oh, I see what you're talking about there, Eddie. You wanted to see that go higher once that 4 hour was filled. Gotcha. Leave a portion open. Well, we didn't get the big run up we were looking for, but it definitely cleared out the liquidity right here. Now I'm looking for 243. 224. 215. Those are the levels I'm looking for next on the downside. Look for this level right here. So if you get a reaction off of here, so if you hit this level, start looking for a reversal, Russell. And if it just keeps running through it, ignore it. Look for this one down here. Still got, look at that body trade below. That wick came all the way back up inside that candle. Body's still traded below it. Now we're still going lower. So wick's doing some damage, but that's on an hourly candle. So it's still respecting this candle's mean threshold. Didn't get hit. So all the time you don't want to see it get a wick above here. This would have been like the perfect place to go short. If it trades above it, come back, find support at it, clean out your trade at break even because it's going higher. That wick up there, turn around, come back down. So look for any opportunity. So let's go down to the lower time frames and have a look right above that high and look for the first opportunity. That was the high there. On a 15-minute chart, we see it trade below it right here. Tap into it right there. So if you were short on a 15-minute chart right there, it came back. You're like, okay, I'll give it all the whole thing. So I'm just going to be just above that or above the 15-minute highest close candle. Its break or its mean threshold, we're just above that. So the moment you clear out this one and take out the low, pay yourself all the way down here. Rejection block, pay that. Now I want to see this breaker here. I want to see that breaker hold price to go lower. So let's go down. That was the hourly level we're looking for. So now what you want to see is this level here. Do we find support? Where do we find support inside here for this to keep going? So as we get down lower, see how you traded above it here? You go, I want to see this trade back down below it. It just pops in here, taps it, it keeps coming lower. Let's go down to a 1 minute level. There's the run above into, what's that into? Stretch it out. There's a little tiny volume imbalance right here. Look at that. Change in direction. Takes out a little high here. Trades back into it. Now you want to see it trade below this level and take out this level here. Takes out that level. Now you go, great. I want to see a reverse back into here, or at least take the trade back into the low. It doesn't even give you that. Doesn't even give you the institutional order flow entry drill. This is what you typically look for underneath a swing point, is a fair value gap forming and an institutional order flow entry drill. And even that you didn't get on a 1 minute. But you did see it on a 5 and 15. Targeting us down here now. There you go, Hadi. You got a nice little reverse here. A little change in direction. We got a body above here now, and a wait for this bull trap to give way. Now, interesting. This would be a real crazy clear out a whole ton of liquidity all the way down to here. Run back up, clear this out, and I'm targeting this up here still. This would be a crazy whipsawing, clear out all sides of the market right now. Bull trap still holding. Come back down, fully fill this level that didn't get a chance to get traded to. You're trading into it now. No body above this one either. So bull traps holding price right now. If this gives way, you got a little bissy right here you've just traded back into. You want to see this sibby here or bissy right here give way on the upside, and the rest of this to fill in, find some support at that, and then start pushing higher. See how you got overlaps here? This one wants to hold price to go higher. This one wants to hold price to go lower. So does this one. And then this one, if this creates another one here, you want to see that hold price to go higher. So they're all kind of wanting to go higher and lower inside the range. You've already maxed out their retracement inside here. That's at least 79% maybe. 75, right on the money. Optimum trade entry reversal. So now you're, which direction do you go? Are you still bearish overall? Still looking for these levels down here? Yeah. See that, just internal range, bull traps, held price, gave you the feeling like, oh, it's gonna go higher. Just cleared out the liquidity here, retested this breaker below you here, and then down she went. And if you draw, look inside this whole area here for the lowest down close SIBI, or yeah, down close SIBI, and you'll find it sitting. There's a little tiny imbalance right here, right over here. Look at that guy right there. See that? Now let's draw it out. Boom. Just cleaned out that there. Hit it. That's the things you got to watch for. Now, before it takes that low, you want to see it come back and just tap it one more time there. Or at least into here. And then start digging into this. There you go. Give it a little kiss. That'll be right there. 273. 272.25. Come on, just give it a little kiss. There's your Bissy. Low's taken now. Pay yourself. Move to break even. Yeah, right there. This just hitting at 73 level. Right? Did that hit 73? Yep. Don't forget, it can come all the way back up inside here. And the bodies have to respect it. So watch this quick, because this is the same kind of thing we're getting here. We'll see where this 40 seconds, that candle closes. Let's see what that one's hit right there. That right there at 250 is 50% of the wick of the breaker on the 4-hour. Look at that level. Go to your charts and have a look. See how we traded above that level now? So now you're bullish inside here. See why you pay yourself at those lows? Came back, took you out of the trade. And you're like, ooh, I'm glad it took me out now. Because if had I just sat on that and just waited, it would have come back, took my stop, and I would have missed an opportunity to make some money. Oh, look at the key reversal. The golden key. That's what we're looking for here, Russell. Give me the golden key. So you see there's no, you'd have to be waiting quite a long time for the reversal to happen here, right? So let's wait for a 1 minute chart. Where do we go on a 1 minute chart? If we start eating through this level, let's see if we get kind of reaction off that, kind of like what we got over here. That is some crazy accuracy right now. Crazy. Look at that. Trade below it, right into it perfectly, and keep coming lower. Delicious, my friends, and delicious. So we're just looking at this level as, does this hold? And it's not. Get back up to our 5 minute. Now look for your rejection block. So the next key level for me is going to be here. Keep your eyes on that little open and close right here. It is an imbalance. You see that little tiny imbalance right there? Keep your eye on that later. We'll watch for this level now. Right there at 40.31. What you want to see here on a 5 minute Russell is see if we close below here. 3 minutes. If we close below here and use this as support, look for a run to extend the range, and then targeting this box down here. The purple line on gold, this one right here, this key level is now the rejection block. This box is the lowest down close SIBI. This is back into Chopsville right here now. We're above it, we're below it, we're back inside it, going lower. Gotta wait for a market structure. You gotta want something clean. If you're chasing a market that's just, look at that. What a beautiful exit. Hit right into the box. Smash right through it. Came right back up inside this order block, that breaker. And then we're running, ripping through here. Key level, man. So now you got to go down into a, now we're going to go into a 15-minute, we'll go to a 5-minute chart and see if we can see a reversal off that level. Nothing there. 1-minute chart. Hit up in here. Want to see a market structure break. Wait for a body to get below here. We have a fair value gap that forms. You come back right there. Tap in that fair value gap that forms below the consolidation. That's a classic. You wanted to see it here. You didn't see it. You could have got in short there off of this one. Kept going lower. Give it some wiggle room back to 50% of this little range. We'll see if that is. Be nice if it stayed below it. Look at that. Just up into 50%. Give you your optimum trade entry. And then short she goes. Gold. Let's look at the little Texas T here. Let's see if that midnight open gets retested. Last down close candle here. Mean threshold. Look at that. You want to see it get back above here now. We saw this run here. You wanted to see that go higher, targeting this. And then when you see it trade back below it, you go, I'm on the wrong side of that. And the fact that it keeps coming back down, you say you want to tap it and go, it's got to leave, right? And then when you see it starting to fail, you go, oh, I'm losing my love for this. Then it trades through into this one, trades below it, opens right on it, and then takes the low. So you got to be prepared to give up the idea that I want to go long to here. When it starts to fail for you in here, you start to go, I want to see that some legs here. Why is this failing? Okay, so if it takes that out, I'm on the wrong side of it. It does close your trade. Instead of waiting for your stop loss to get taken. Then when it trades through your low, when it trades, closes below the low, comes back to it, taps it, you can make back whatever you lost in that small little area there. Bitcoin nailed that. Look at that precision in there. Wow. Discount down here. See how that level, you don't want to see the mean threshold of this candle get taken. And that's the mean threshold right there. Boom, pops through it. Running down for deeper stuff that hasn't been retested. It got retested right here. I'm looking for this spot right here. See if we can get this line. Look for the bottom of that box. Nice. Did you get that, Russell? Is there something in there? 1 minute. Wait for this structure break. You don't want this bull trap. Don't jump in too early. There's nothing super clean here. So wait for this level here to get closed above. Create a fair value gap. Ideally what you want to see. So if it's not manifesting in the way you want it to, and you're feeling the impulsiveness of trying to catch this for a run above these highs again, wait for something clean to set up in here. And if it slowly works its way up without your setup, that's the discipline you got to have. That's how you have to recognize that it's a psychological fear of missing out that you've got right here, right now. Like, oh, good bull candles. We've got a chance for a key level to be held and then run higher. That's fine. Let's wait for their setup though. And sometimes that means what you saw down here and it's running. You go, why shouldn't I be in this? I should be in this, should be in this. Wait for the bull trap to give up, because you've seen so many times for this bull trap here, the first candle to the left. Want to see a body get above that one, and because we're so close to this one and we're buried inside the larger candle, wait for them all to break free. Wait for a fair value gap to form here, tap it and go. No different than we'd be waiting for the fair value gap to form below this low, come back into it and catch it. Same kind of thing here, same setup. Yes, above, you can say 40. Let's be safe and say 47.7 or 47.9. You want to see a body get above here and a nice clean pop through there too, not just a little tiny body pop through. There's the mean threshold. That's the part you start to go, I want to see, do we get resistance here? Which is what we're getting. See how we're banged off that 3 times. This little guy's fighting, doesn't want to let let you get by. So now we want to say we're through the mean threshold of this one. Is this going to hold price and push? And these two guys are going to battle. That's kind of like what I'm looking for. This scrap-a-doodle. Yeah, that's one of those, do you want to keep playing in this kind of crappy market? You catch a good, this is just choppy, man. Trying to eke out a trade out of that. That's damaging. There's other markets out there that are way cleaner to trade inside. Looking for this premium box, discount box. Traded above, you come back inside, run higher, look for this premium or first fair value gap presentation, look for that to get hit again, and then see if you bounce off of that, come back to premium discount. See if we bounce back and forth inside the oil here, or break market structure to the upside and go higher, or break market structure to the downside, go lower. This is internal range liquidity. That's what we're hunting there. See how this one's not, this one's holding, Russell. That's why you don't want to jump in prematurely. You just wait for the market structure shift. And what's down here is this little tiny imbalance. Look at this. Stretch it out. See that little guy down there? One here. One here. You want to see, you don't want to see this close. We've got no body above there yet, but you don't want to see this close in. This is like a D level or a C level response. There's 75% of that. And we've come back into that little area here. So you want to see it start kicking off, eating through this level, go higher. Otherwise, look down here still, here and here. 1, 2, 3. Get above here, climb up on top of this guy, and then that guy, and then let's see some running. Which one are you looking for, Derek? I'm waiting for the 1 minute inversion fair value gap to get traded above it, come to it, and then go long. Just remember, you want to get above this one as well. Otherwise, we're just trading internal range, and this one hasn't been hit yet. So if you do trade above here, that is compressing right now. It's getting really tight. So it's got to blast out of here somewhere. It's either got to go shooting down or it's got to shoot right back up. This area has not been hit yet. So for me, I'd have to see that breakthrough here and then start reaching for that. And then you want, in order to see a decent breakout, you got to see these highs get taken. Otherwise, we're just inside this small range here. Even though we're in the discount portion of the discount, See the discount portion. If I take this into quarters, see how there's the premium. So this is the premium or discount premium. This is the premium discount and the discount. And you are in the discount, bouncing back and forth between premium discount and discount inside the larger range. I don't like this. I was watching Michael do this one time and I was like, I think I want to try that. Because I realized that it really wasn't the important ones are sitting in here, the 75, 50, and 25, that the highs and lows, but for some reason that my eyes don't like that. I prefer that with the extra boxes in there. And these are the 3 key levels you're looking for in there. So you're not really looking for these two, but you're looking for those. But for some reason, my eye prefers those and I don't like blanks. So I think I'm just going to have to save that as not fib retracement. We're looking for quarters. Save right over it. Yes. I'm going to keep that back where it was. So you see how you're in premium discount. Let's see, it looks more clear now, right? And see how we're kind of sitting right in the middle of those two. Anyway, you want to get out of that whole zone, man, because that's kind of messy. Oh, just shy of our objective for Bitcoin. Now, why did it not reach all the way down in there? You say, mean threshold of this candle. See that whole price? Delish. And it didn't even reach into our little guy here. This was the one that reached into there. Okay. Gold. We're still waiting, Russell. Still waiting. I'm waiting for the, yes, sir. Show me the golden key. 941 candle. Thanks, Derek. 941. This one, yeah. So that's just the one you got to be careful of. Even if you get up on top of that, you may just see this and run to that, then turn around and come back into the range again. So unless you're hunting for that, which is more than 50% of the range, keep your eyeballs on that. Just my advice to you for what it's worth there, Derek. B-Man D. So you got to break out. So I like the fact that we're below this level. We just keep working. That makes it heavy. It feels heavy to me. Now I want to see if it does suddenly just break through here, find support. You want to get through this next one as well to start hunting for liquidity above, looking for this little imbalance right here as well. It's just way too choppy for me to even look at that for. I'm with Russell over here or something cleaner. Bitcoin's not done coming lower. We may still get it. We may still get it. Okay, you just missed this one. We missed that guy. Yeah, see how we're stuck inside that range, buddy? So you just got to be, we're bouncing off the rejection block, and we're really not making any major attempts to dive down there. We're just kind of waffling it. And you want something that just says, hey, look, I'm making a move higher or lower. Again, feels heavy off of here, but you want to see a distinctive thing, a drop below this now with a fair value gap forming, and then an institutional order flow entry drill or key off of another area over here that supports going lower. But I do see the point you're trying to make here. Yeah. If you want to push that higher, for sure. For sure. Everybody's going into a little tight consolidation now, so consolidating. See that level? We wanted to see this level get broken to the upside. It does, and then it starts to work through it again. You go, oh, that's not good. I don't want to see the downside get taken. It does. You're on the wrong side of it. Get out. And inside here, you're bound to see a retest of that. I'll go down to a 15-minute. Watch for a retest of this level here. 5-minute. 1 minute. Right there. That's the 1 minute retest low. Hourly, say we break through it on the downside, come back into that candle's mean threshold. Goes lower. I don't think it even tagged that. Did it not? No, it didn't. Left it open. So let's see if there's a 15-second retest there. Not even a 15-second retest. See that? Crazy. But look at that mean threshold of that candle. Just bam, right off of it. Here's your like institutional order flow entry drill. We just came back up inside that there. Lower, or you're looking at this one here. Retest of that little imbalance, whatever. You have to include the whole thing. Ran lower. Change in direction. Mean threshold. Look at that mean threshold holding. Take out the high. Don't get a retest. Don't get a retest. You're looking for this level now. Don't get a retest. Looking for that candle. So this whole thing you don't get a chance to play in. You want to see that mean threshold hold? It is. Wait for that to get broken to the downside and then retested. Retests it right there with perfection. Now you can go short. You want to see this level get broken on the downside. Finally does here. And then you look for the areas that never got retested down here. These ones that just, it ran away on you. When it runs away on you like this, always think it's going to come back. It didn't even give you an opportunity to get in on that. It just ran quickly away inside the range. The moment it gets an opportunity, look for all the stuff that didn't get retested back here. And they're all getting nailed. Slowly grinding its way down. There's their first objective. Hit that guy. Now I'm looking for the next one down here. Gold. What's gold doing? Oh, Russell, aren't we glad we're not in this yet? The key is right there. Oh, now it finally hit the key level. Slice through it. That's why we don't rush into a trade where you see this start to impulsively go higher. You go, I want to see this bull trap get broken. But the bull trap says, no, I want to trap you in here. I'm going to trap you. If you want to go long, I'm going to trap you in right off that level. And then we watch for our little discount. Was there a little tiny one down here? Yeah, right there. Watch. Remember I was telling you to watch that level? Let's draw it out. I'll show you. That's why it's important. The last little fella right here. Let's draw them all the way out. Look at that. Trace through it. Right back into it. And away you go. How beautiful is that? Even when this guy trades through that one, it goes all the way back, says thank you very much. Thank you very much. And then leaves. Takes out the low. This is just like a SIBI on the other side. Those are the things you say. If we break that to the downside, I'm on the wrong side of it. Now I want to see it come back, retest this, and then aim for the bottom, which is no different than any other retest I've been showing you guys. That's just a tiny, tiny version of the exact same thing, whether that's a SIBI or a volume imbalance or a price imbalance or a gap, a common gap, whatever. That's the target you aim for a retest before the low gets taken. This is ideally what you want to see. Trade through it, then to it before running out the low. And that's exactly right there to the pip. You see a nice little run down, takes out the lows. Delish, goes lower. So short, that would have been a perfect short. The moment it hits your level, your breaker, or sorry, your rejection block, pay yourself, move to break even, take the low, move down into profit just above 50% or above your the next one, which was over here. This is what we outlined earlier. You want to be just above that. And now you want to see this candle and those lows act as support. I don't want to see those starting to get ripped back through, because if that happens, then we're looking for this fair value gap to create our change in direction. Now we've swept the lows or swept this key level. I'm looking for any opportunity for a change in direction and a run back higher now, back into the premium, box to box. That's how your mind's got to kind of look at it, or at least how my mind looks at it. Keep me posted on that one there, Russell. Oh, look at this shit. Right off the key level and back into crap again. Bitcoin, what's that up to? Hit our key level. Beautiful. Now we want to see how it acts here. The same thing I just said in gold. This is the thing that we're looking for. This happens to be a combination of a price imbalance and a SIBI. So add them together, makes this box. If we trade through that box, you want to see it trade just a body like we saw over here in gold. We want to see that little body trade through it, and then I want to see it come back into that, which is exactly what you're looking for here. This is that little imbalance we looked at, that volume imbalance on gold. Same kind of idea. Trade through it, back into it, and you want perfection. You want to see no wicks. Just hit it inside this breaker here, and then just ba-boom. Take off. Start running for these lows. Take out these equal lows below you. Start aiming for this BISI over here. Does that make sense? Does that seem clear to you guys? I noticed that at least so far price hasn't closed below 50% of the 15-minute wick. Gold looking weak. The key is hidden. Stay on the bus, Gus. Don't need to discuss much. Just be coy, Roy. I have a pronouncement. Let me know when it is appropriate. Let me hear your pronouncement. Hear ye, hear ye. The B-Man D has a pronouncement. Everybody gather round for the grand pronouncement. B-Man D, you have the floor. I like seeing this, a body close below the lowest closed candles close, and then a retest of that. It's not 100%, but I do like to see that as an indication of a little bit more weakness. Then you look for the wick, take this into quarters, and then you just say, am I trading below 50% of that wick? See how its bodies are respecting it right now? So does that hold it, or do we just roll over and aim for our next objective? And now you want to wait a bit more. Ladies and gentlemen, you all go about your business. B-Man D will make his announcement later. We do appreciate you dropping everything you're doing to come over for the announcement that's not being announced. Please move on. Stop gathering around. We'll inform you when the B-Master D is ready to pronounce. I want to see the 15-minute. Oh, wait. Come back. He's saying something. He wants to wait for the 15-minute candle. Close above the 25,263. Derek, you can't have people just coming and going, man. You want to see it close above the what? 25,263. Why 25,263? What's at 25,263? I would say not holding, but for holding. We're for holding. We're folding, man. I would call that a for holding pattern. We're folding up shop. It's been heavy, slowly like sinking into the mud. This is when you say, I'm in quicksand, and all those people who want to go long looking for new highs, it's holding them, and they're screaming, somebody bail me out. Just give me a stick to pull me out, and they're sinking in this quicksand of sugary goodness. See these little wicks? I don't even like seeing that. There's a little tiny bissy down here. Get that sorted. What's next? Where are we going next? So this bissy over here. Now you want to see this close below here. Come back in, find support inside here, and then start running this lows out here. That would be the next low. So look for here, 5 minute, 1 minute, look for a retest of that level, and then start gunning for here. Next level, come to me, come to me. I got my bias right today. Just didn't get the high I was looking for to initiate the run, but it has been sloppy for sure. Can you see how you'd have to, once you've started that 930, you've run out that high there? Ollie would love this kind of stuff. He likes to see that run it out and then do a two-stage distribution. I guess that would be his two-stage distribution. That broken leg, price leg. You're running around on a broken leg. So you'd have to see, in order for this to start marching higher, I want to see this breaker here that takes out these lows. I want to see that get broken. That is the bull trap you want to see get taken to the upside. And then start hunting for this. Take out the next bull trap higher. the quick little targets to key off of. And you want to see if this is going to go through here, Derek. You want to see some acceleration, bro. I want to see that just rip through here, create a big breakaway gap, take this out, and then start marching it higher. But just key off of here or key off the top of this. And then it's mean threshold, all the stuff that we typically look for when we break out above a high and how to qualify that. Otherwise, still rolling over, still coming lower, still looking for here and here. There's the midnight open we were looking for. Look at that big retracement though. Right into the premium box. Discount, premium, hits the nice premium, rejects off of that, takes out this little swing point here. Right there, comes back into it, goes lower, cleans out this discount box, and then we want to see a retracement into the discount box, right? Before taking out the low. Look at that. Right back into the discount box, and then bam, takes out those lows. That is classic, what we've been talking about. That's the general theme of the day, man. Watch it, close below, but you don't want to see it take the lows. Trades back into it, then takes out the equal lows. How love is that? And then for this kind of stuff, you want to say, well, I don't want to see it trade above that. This little, include this imbalance right here. And then that becomes this new SIBI that if it trades above that, then I'm hunting back inside internal range liquidity. So you're maxing out that level. And what is that? Is that even 50%? I don't think it is. Nope. That's even stronger when it hits that and just doesn't even give you your 50%. It just snaps off of that and keeps coming lower. Ooh, lovely. Retest. Now I want to see this stay open, keep coming lower. Institutional order flow entry drill, keep coming. This whole candle coming back here, don't like seeing that. Want to see this take out that low, pay yourself at the low. And now you want to see this keep accelerating down now. Market structure shift is sitting right here in front of you. And then you're looking for a run higher. So right now you're in a market maker sell model. And we're taking out original consolidation. See that? And then our discount box is right here. See that? So that would be nice to react off of there and send this back through this SIBI. Now that you've swept the lows and we've hit a discount box, I want to see it trade through here, take out that candle, use that as support, give me a fair value gap above that. All our qualifications of taking out that high to go higher. We traded through that level, back to that level. You want to see that roll over now. Start coming lower. We have a small little imbalance right here and here. That's your bull trap. If that lets go, then you're on the wrong side of this. So the most ideal place to catch this is right here, 121.777. If it closes above there, comes back and taps it, get out. It's going long, and it's got these targets above us. If this holds, it starts to trade back through that level, give it a little kiss, keep coming lower. It's got into sloppy now, Russell. Imbalance right here. body's above here, retests this. This is looking good for a continuation. Let's see if we can get above here and here. You're inside this range here now. Let's get a decent market structure. Shift would be up here, but we're targeting right in this range. So are you in a discount inside this range? Are you in a discount to catch a premium? Put your fib tool from here to here. Discounts here. There's 50% of the range. We just tapped it. You've already got this one here. You want to see range extension. You just got it. From here, range extension, pay yourself, move to break even, and then you want to see that keep going higher. So right, what you want to see here is a pop up here, a body, then come back and use this support. Key level, this is pretty much consequent encroachment or mean threshold of this candle, and then push up into that premium box here. Yep. There's my second level. Eaten. Third level is done. And what's my next level? 189. 189 is my next level. See how his 3 a.m. to 3 a.m. candle is the target? You're below that. We talked about this earlier this morning. All the time we can stay at 8 o'clock here, all the time we can stay below that consequent encroachment of the, or mean threshold of the 3 a.m. candle. You're overall bearish. Now, whether or not you can withstand all this noise, you just say, look, man, I'm in. I'm going to walk away from my charts. And when it hits 3 o'clock, the next 3 a.m. candle, I'm out. And this is where you get trapped in all the noise. You just trade a 3 a.m. to 3 a.m. candle, which is what Mark likes to do. He's laughing right now. I could just hear him chuckling away to himself. Said, how many times have I told those guys, if you stay below 50% of the range of the 3 a.m. candle, then aim for the next 3 a.m. candle. So he's taken his little wheelbarrow of cash off to the bank and said, I told you so. This will be one of the discussions we have on our little trading summit in Toronto. We're going to put our heads together. I got some ideas on this. The trading summit's going to be awesome. I can remember what my take profit model 5 was. because I've got a take profit model 6 as well now. But I had a take profit model 5 the other day. Does anybody remember when I mentioned that? I can at least go back through the video, because I think when I see it, it'll remind me of what my take. I can't remember what my take profit model 5 was. But I have a 6, and 6 would have kept you in from this Mark 1, Mark 3 to Mark 3. I'm going to discuss it with you guys in Toronto, so that's where it will be released. And its design is to keep you in a trade longer so you can avoid this mess, this noise. And this, with the take profit model 6, that's your target. Feel it? Can you feel the cha-ching coming? Bing! Right there. Pay the trader. Dun, 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 dun. Pay yourself. Mark is out there just collecting bags of coin right now. He's like, I don't care about all this noise. All the time it's trading from 3 a.m. candle to 3 a.m. candle. We're staying below that level. There's a trade model. That's his trade model. And it didn't matter about all this stuff. We don't know it's coming yet, Adi. I can see that coming all the way down into the next 3 a.m. candle and the next 3 a.m. candle and the next 3 a.m. candle. Don't be too surprised if we just keep ripping through all this lot. Look at the 4-hour chart. Look at the 4-hour chart and what do you see? I've had this discussion many times. So what do you see significantly in a 4-hour chart that says to you, this isn't done going lower? Especially where we close on this next 4 hours. So this 3 hours and 12 minutes, it'll probably make the run, but 11 o'clock, you could see a nice little retracement back up into here. It may even run on some of the liquidity here. But I think overall, we're heading through all this lot. We are running to here, at least 126 maybe. 126, 137, bottom of this next 3-hour candle. This is my, where's my carrot? Let me just give him a little taste. Smell the carrot. Smells the carrot. How's gold doing, Russell? All right. This is good. This is what you want to see. This is good. 15 seconds. That's exactly what we're looking for. That, then come back and give it a little tap. So now we're going to have a graded response above this level, targeting this level here. That's the macro time. See it come back to 50% of that would be nice. And see it bounce off of 50%. If it takes off without us, we'll wait for a market structure shift above that high. But just remember, if we don't get retested here, we're gonna, and I'm giving you a bit of the hint for that 4-hour question I gave you, which nobody's answering, but that's okay. We're looking for this area back here to get retested before the high gets taken. If we get this level up here, it hits it, comes back, hits this, then I'm looking for a reversal for going higher. This is a quick run to premium, reverse, catch the level that it didn't give you an opportunity for. This is an A+ run where it just takes off and goes for our premium box. Now, what I'd like to see is you just come up and tap it, bounce off of it, come lower, and leave most of it open. And worst case is consequent encroachment only, come back down lower. No entry yet. Don't sweat it yet, Russell. We're not going to chase it. Just wait for your setup. A lot of people want to chase that. And if they are chasing it, that's not a, even if they're getting rewarded here, let's say you saw that run, that big bull candle, and you just entered rating on that. That's not a trade setup or not a reliable trade setup. There's the tap. Now I want to see this come down lower. It was right on the money. So I want to see this start to come back down now. This we're coming back for. So the area that we didn't get a chance to retest, we're coming back to retest it now. If it comes back up into here, I get less love for it the higher we dig into this level, but still you want to see a reaction off of here, come back lower. Beautiful tap of the box right now. Just wait for the entry here. Because here's the thing. If it does run through here, then we're looking for this box. We get a body above it to hold price, and then you're waiting for this. Because we're so close to the top of this is going to act like a bull trap, and it's sitting right next to the top of this premium box. So I want to, not only do I want to see that get taken, I want to see this get taken as well, and then we'll start acting off of here. And unfortunately, you can't catch, the setup is not in here. It might have been in there on a 15-second chart. Let's see if there's a 15-second one there. Old high taken, coming back into the mean threshold of that. There's your fair value gap. Wait for a body to get a trade above that. It comes back, taps it perfectly right there. There's the swing on a 15-second chart. There's the perfect entry at 40.28. For continuation, take out the high, get confirmation on that, continue going higher, take out that high, get confirmation on that right there, and go higher. Look for the premium box. You've hit the premium box right on the money. Now we've traded above it, coming back into it. Now you want to see these highs get taken. So 15-second chart showing it. We rip right through it. We're right up to equal highs now. Come back and give this a tap. And you're paying a real premium for this now. And you're getting into a time where 11 o'clock, remember we talked about 11 o'clock could take a run up into that level. You're getting into that 11 o'clock macro. So if it just sweeps here and rolls over, prepare yourself. If it trades back through this, that you're going to come back to that level that didn't get tested. There's the retest. Now you want to see that start climbing higher and take out these highs. Now you see how that fair value gap is forming there. If we trade below that, look for this level right here. If we start trading below that, come back into this and start taking out this premium box again, change in direction. Then if we take this candle out on the downside, look for support off of here to come back lower. Otherwise, I just want to still see this. Body's respecting that. Just keep pushing higher now. All the time we're in that premium box and finding support at that premium box, I want to see that keep going higher. Bull traps holding. See how we traded below this level now? Watch, see if we get below here. That's a full retracement back in here and fill that now. See if it comes back into here. Starts to come lower. That candle right there, you don't want to see that. You want to see this close here, pop up above that, use this candle as support to go higher. You've come back and filled it now. So there's the complete line in the sand is done. So you don't even want to see a wick getting through here anymore. Otherwise, there's the retest of the reversal. Let's get rid of this. So now we're in a bearish turn. And it's not until we get back above this level that that level right there is support. So now this is a bearish reversal. I want to see this level here, this candle here get taken on the downside now. Use the support inside here and here to go lower. And if we go back to this guy, look at that, right off that 3 a.m. candle. You see how you pay yourself from 3 to 3? Change in direction right here. Body trades above it. You come back, tap it right there. How beautiful is that? Now you're long. Did you catch that one, Derek? Whilst I was yakking away over there in gold, That's the trade right there. Body trades above it, comes back into it. Perfect entry. Continuation. Looking for a premium box way up here. That's your perfect entry. Look for here. And then look for here. If you're doing your take profit model 1, I don't know if Rez is in here. He's been studying. So I like that. He's like, I'm able to make it to the trades during the day because I'm studying the ICT stuff, which is exactly what we want to hear, man. Exactly what I want to hear. Don't waste your time here with us. If you don't understand all the ICT concepts, go back there and study from him. Don't pay anybody. Go to the man himself. He's doing lots of free stuff out there still. Learn it from him. Then come back in here and we'll show you very precise levels that we're looking for support off of. Look at that. Another nice little tap like this one here. A tap. This one here. Nice little tap. Keep going higher. Look for our box. I've taken a few at this point. MQ, good. Bingo. Done and dusted. Box and box. There's a box below 50%. Tap. Box to box. Done and done. See how that's still finding support there? We have a bearish change. Both trap is in place. Bearish change. Now we're back inside this range. Look for 50% of this. This is your take profit model 1. If you're short there, right off that perfect nice little place there at 40.41, you're short. As soon as you take out that candle, pay yourself and see if we get support off this candle here now. Wait for a body to get below here. This wick has done its thing, but wait 24 seconds and see if this now becomes a SIBI with that little imbalance right there. And then we want to see if we get a candle above here at 40.40. So that level is also this level to clear to go higher. So you're looking for the next price leg higher. I'd be looking right there. Continuation. Or wait for a body to drop below here. And it's already open below it. So give it a little tap. I'm going to go short there. And I would be just above here. Because if I'm wrong, and that trades through here and here, takes out that candle, that'll be my bull trap. I want to see if that holds. And if it doesn't, then I'm on the wrong side of that. Then we're heading higher. So looking for 50%. I want to see this hold now. This is the potential for the run higher. So no, see how I've traded above that level? I'm on the wrong side of that. So I'm going to put my stop right there now. See how that's traded above this level right here? And we're trading back into this. And we're above this candle here. I'm going to close out right there. We're above that level, so I'm going to wait. If we get below here again, then I'm just going to wait. I'm just going to leave this now. I wanted to see 50% get hit, and that whole retracement back through that level, not what I wanted to see. So there's an opportunity to get your trade off at break even. See, the ideal one would have been there. I'm on the wrong side. Come back, break even. Eat through here. That's too choppy now. I want precision, right? If we close above here, bull trap. Again, the bull trap got me. I saw this trade through here. And look, it's going to make it all the way down there now. Shit. Oh, well. Bull trap got me. And we're still back inside. Shit balls. See this right here? We trade through it. We're allowed to come back into that. I was too busy faffing around in here and ignored something blatantly obvious right here. So stop loss that was sitting up there, logical. Leave it there. Look for 50%. These wicks, not a good thing, right? You want to see some acceleration down there, not all this wick stuff. Then you have to decide, do you want to still play inside this or move to the sidelines and wait for something cleaner? See how you can talk yourself out of a trade? I'm not giving back all the profits I made in gold this morning, so just see if that level holds and we still hit our 50%. How's NQ doing now, Derek? Now we're still bouncing off that premium box there. You're through here on above it. Now you want to see support here. And then go higher. Watch, see how that body ends in 5 seconds. It's got to stay above here. It does. This is like that venom thing. You got, it's maybe not venom, I don't know. I don't understand his venom thing 100%. So Bissy, Sibby, take that higher. It's got, these have to hold now. This one has to hold to go higher. This one has to hold to go higher. This one fails and that one fails. Then look for this little cluster here to provide some support to go lower. And you're back inside that range again. And that's all you get for your 11 o'clock retrace. There, hit 50% now. That would have nailed perfectly into my little level. Jeepers creepers. Okay. So there, see how we traded below it? Coming back into it. Now I want to see that come lower and hit at least 50% of this range. Stay inside here. If you start to trade back through that, you're into a chop, right? There's the high of it. It's got to peel off of here. come lower. See how you traded above this level, all the way back inside it. Traded above here, here. Come back, use these as support. Let's see if we can get through this level again. You're targeting this first fair value gap again. Come back, give that a tap. There's a fair value gap forming above if that holds. Otherwise, retest the old high. Keep going higher. Bitcoin. Retest. Let's see if we can get above this high here and use that as support. This already broken through this level right here. This premium box, discount premium. We're through the premium. Now you don't want to see it trade back through here. So you want to see that little tap right there and then start going higher. This candle you don't want to see. Otherwise it's going to come back through. So bull trap holding. Wait and see where that closes. It closed below, so tap, come lower, looking at this level now. You're in this one, and this one. I feel like it wants to reach for here. That level has not been broken to the downside yet. It's pretty close. Keep nudging just below here. Use that as support and reach for here. Body trades above here. Find support at that. Now get above here. I want to see that go higher now. Let's get above here. My stop loss is going to go one tick below that low. And I'm going to aim for right there. It's above it, support inside this range. Let's see if 1562 holds. Do a little 4x here. That hits it. Nice. Premium box. Hit. Nice. See if that holds right here. Yes, it starts pushing higher. Take out that rejection block. Boom, done. Nice. Retest. We want to get a body above here, no, not a wick. Otherwise, that's just a run on liquidity. Give this a little retest right in here. All this little area here would be nice to see a little test on. All the way into that candle's wick and the mean is body. So there's the wick done. Body, mean threshold right there. Look at that. Right there off that mean threshold. Run higher, pay yourself. Pay yourself. You don't want to see it cut back through here because this hasn't been retested yet. You see how you want that to stay open. See how it's eaten through that already. We're right back into the discount box right there. Just tapped it. Got to start accelerating higher now. And you're looking for a run deeper into this range. So you're looking for this SIBI here, this order block. Let's get a body above here yet. No body there yet. Ali, you're late. You're out of there. Okie dokie. High taken, trade below it, you're into it, short here. From there, you're short inside this range right now. Bitcoin, you're just boxing it here. I'm closing that out. That's not doing anything we want. Come on. It's too sideways for me. Nice little change in direction right here. Short there. Take out the low. Low gets broken. You don't get a retest of that. Low gets broken. You don't get a retest of that. That's some serious getaway there. If you didn't catch it here, for a box to box trade, it's a take profit model too right there, and a quick way to get there too. That had no intentions of coming back for you. It just said I give you one chance and one chance only. That's it. Quick little turn. Banks are on a potential turn here. We'll see where this one's already closed below that level. Laurentian Banks looking for a turn. You don't want to see it get all the way back here, but this is the turn. We've traded below it, into it. Now you want to see this little swing point get broken, and we actually opened below it today, and we're trading back into this wick, this body, that whole thing here. It's got to start getting back above here, Gary, if you're watching. We'll see what the other three banks, you just keep your eye on all the banks. If all the banks are starting to break their recent low here, this swing point, in this case, it closed below that down close candle. You want to see it just come back and tap it and go. Its mean threshold, you want to see no more than its mean threshold get hit. It did. It wicked through it multiple times, and now it's finally collapsed below it. That's the level on Montreal. That's the level on the Scotia, and that's the level on IBC. Change in direction inside that range. You're just kind of bouncing off of here right now, so I'm pretty much done for the day now, I think. That's the lion's share, unless there's a big run this afternoon. We'll wait till after lunch. No, that didn't work out either. Glad I got out of that one when I did, because that would have traded back against me big time. That would have taken my stop. So I'm glad I got out of that. Two sideways. Watch this level here in Bitcoin. You want to see if this holds. That's got a hold right now. And you got to get above here. You want to go long. This has got a hold in oil. And you see how it's getting into a little chop fill here. That's got a hold. Otherwise, you're just boxing from here to here in that range, which overlaps this range. So that's a box to box right now, there to there, compressing. It's got to break out. It looks light, so it looks like it wants to lift off here. If you close back below here and midnight open, then we're going lower. Yes. That's your line in the sand there, and yes. Take your this level right here. Look at the wick and watch these key levels. Dwaddle is a new technical term for consolidation, which has become so commonplace. Yes, indeed it has. See that nice little change in direction right here? Inside this range, if you're taking the take profit model 1, internal range liquidity hunting, there's 50%, pay yourself at 50. You now hit 62%, pay yourself here, move your stop loss to 50. So half that trade is off here from this entry right here. Half your trade is off, or 60% of your trade is off now. You're looking for 70% of your trade, or it'll come back and take you out at 50. So this is where your stop loss kind of stuff is. So your stop loss will be sitting right there. You paid yourself a portion there, provided you have enough on to scale out. And if it comes back and touches that line, you're done. It's 60%, 62%. If it keeps coming, you're going to take another 10% off here, so you'll only have 30% of the trade left. And you'll move your stop to 62%. Still not there yet. So we'll just kind of watch it for a bit and see if we can get that. This is an example of a take profit model 1. Entry was right here with perfection, I might add. 50%, pay yourself. Your zero stress. Half your trade is off. Another 10% of your trade is off. And you're sitting at 50%. So you're in total profit here now. Now we're just waiting to see if 70% gets hit before 50% gets hit. So you only have 40% left of your trade in play now. And that 40% is well in profit. Now, if you have a downside objective that reaches here, you hit it, wait for it to get taken, and then you can get back in it for a short or continuation. Bang. Now you've moved, you take another 10% and move to 62. So now that trade that was at 50, oops, sitting at 62. Right there. So if it comes back and tags 62%, you're out of the trade. You've got 70% of your trade is taken off here now. And we're looking for 75. There you go. Now you're 70. They're 80. Take a portion off there. Leave 10% on to run for discount. You'd be out right there. That box has been hit. Move to the sidelines and wait for that level to get taken. That's take profit model 1 all the way through to scaling out all the way down. So that one was a nice example of a take profit model 1. What time is that? That's 2 hours in. I'll have to let Raz know. That's a nice take profit model 1 and leave 10% on for running. So if you've got one more 10% left on there, you leave your stop loss above this candle's high and let it run. Or you pay yourself at rejection block or at the low and move to the sidelines. But that's a perfect entry for a scale out all the way down for internal range liquidity. And if you're doing a box-to-box trade, a take profit model 2, take profit model 2 would be this. Take profit model 1, you enter in here, you're targeting this SIBI. You enter in there and you just let it run, and you put your stop loss right there. As soon as you hit it, you're done. That's take profit model 2. Okay. Take profit model 3 is this right here. So you enter in here, and now you're waiting for the first time to see a SIBI get broken to the upside. Unless you hit an objective that you want, you just say, I don't care about that objective. I want to see that one get blasted through. I'm going to stay in this trade all the way lower and lower and lower. But if I see this close above here, take profit right there, now you're out right there. Take profit model 3 completed. So your trade is finished there. Take profit model 2 was the most profitable one out of all of them, because you had the majority of your trades still on and you finally scaled out at take profit model 2. Take profit model 3 is there. Take profit model 4 would have been like this. So you get all the take profit models here. Take profit model 4 is take the run above the high, that first little swing that you see. You're going to do a fib projection on that. There's one fib projection, so take profit model. So you enter in here, you go to 1 standard deviation, you pay yourself there, move yourself to break even. As soon as it hits 2 standard deviations, you pay yourself at 2 standard deviations, and you move your stop loss to 1. Take profit model 4 pays yourself right there. So you've got half your trade or 80% of your trade off there, whatever you do. Usually 2 to 2.5, what Derek and I usually like. 2 to 2.5 is usually your classic deviations. They're safe range. So take 80% of that off and leave the rest to run. Put your stop loss above the previous standard deviation, and you'd be out of your trade there with the majority of your trade off at 2 standard deviations. Does that make sense? See how this is now made a reversal? So take profit model 3 now turns into new take profit model 3 back in the other direction. So if you get out here, you say, I'm taking that trade off and I'm going long there. Now I'm back inside this range, and I can either do take profit model 1. See how it's a rinse and repeat? This is a valuable piece of information for you, Rez, if you're listening. So you enter in here, 50%, take half your trade off, move to break even. Now you've traded in this direction from box to box, and now you're looking for a reversal or take profit model 3 into a take profit model 1, pay yourself, and you're at 0 stress. So you've made all that money down, and now you're making money on the way up. And if that reverses on you and takes this out on the downside, you've already at break even, and you've already taken half your trade off. See how delicious it is? Sorry, that's the high of it right there. There's 50%. I don't know how many minutes into that it was, but 2 hours plus. So right there, you'd be out at break even, and or the cost of your trade plus 50% of your trades off there. So if you're on the wrong side of this now, what we look for is either a buffer trade, so you wait for it to come right back into here, right back into there, scale in to go higher, and do the same trade all over again. And as soon as it hits 50%, pay yourself. This is what I used to call buffering. Okay, so we're buffering for the potential for this to run through us here. So if you're in again there, as soon as it hits rejection block, pay yourself. Pay yourself at 50%. If it closes below here, close your trade out. I don't even like to see wicks get back there, but that's it. That's your best entry. Now, if it starts to trade below it, there might be a little tiny gap here. That'd be it. My stop loss would be sitting right there. I don't want to see it come back down into here again. Out. So you made money on the way up. You're in and out right there. Now you wait. Wait for a market structure shift, or wait for this to trade below here, come back into this and go lower. If that trades through that level, wait for the high to get taken and then continue on for the premium box again. That makes sense? So Rez, if you're watching, that's all your models right there. Take profit model 1, 2, 3, and 4. And I can't remember what 5 is, but I know what 6 is. I'll put that as the title of today's video. Take profit models 1, 2, 3, and 4 explained. So now we have a reference video. See how it just fails to get up there now? You got this change in direction, a little swing high, change in direction right here, trade through it, back inside it. So now you've got this one battling this one. That's why you kind of move to the sidelines, because as soon as you see this battle beginning, you stay out of that. Darren, look at those 15-minute bullish breakers or bearish breakers. What's BB's? Bullish or bearish? Capital B would be bullish. Small b would be bearish, I guess. I don't know. We're into the mean threshold of that candle. We've traded through it, hit it. Now I'm looking for this to keep coming lower now. That little key point right there, I want to see that get supported and come lower. So we'll see if this holds now. Pops through there, finds support at this, and then start running for relative equal lows. Bullish breakers. Okay. Bullish breaker. Where's your bullish breaker? This one here. Is that the one you're looking at? Nice run back up to it. Hit it. Went lower. Delish. Now I want to see if this is going to continue to manifest itself. And I'll go to a 5-minute chart and see what you see in here. So how you see this premium or this SIBI here. Body trades above it. You come back inside it. You run higher. You run up into the bull trap. Rejection block. Pay yourself at rejection blocks, because you're about to get your ass handed to you if you don't pay yourself at rejection blocks. It's an easy way to get a little bit of money and prevent this kind of stuff from happening, because now you're underwater. And as soon as it trades through that, you go, I'm underwater. This is going lower. So if I can come back to that, I can get that short. It goes down, sweeps even lower, doesn't quite take out the low yet, finally comes back into it right here, and then goes supposed to come lower and take out the lows now. So that level right there on a 5-minute chart is saying, I want you to go lower. If you trade back through that on a close, wait for the market structure shift, and then keep going higher. It's a rinse and repeat rule set. Albeit it's my rule set, but you don't have to adopt it. Whatever your rule set is for looking for range extension. And I think we're going to get these down on paper. So when we meet in Toronto, you guys bring your notebooks and we'll set down all the rules, at least the rules as I see them. And then you guys can test them out, try them, and make modifications to them. And if you're going to make modifications to them, share them with us, so that you say, this, I just tweaked this a little bit more. It makes it solid and back testing has proven that it gives you about another 5% more accuracy or something like that. Let's see how that level right there is still holding. We haven't got a body yet through here yet, so it's just coming back and it's banging around between this guy and this guy. See how that? That's the war we said we'd see happening, and that's exactly what's happening right now, is they're kind of fighting back and forth between one another, those two dudes. So now we're looking for, the boxing is happening back and forth in a really tight frame, and we're getting into lunch hour now, so we could be just running back and forth inside this range for a bit, do a little seek and destroy, take that high out, because now I'm between this candle and that candle. The moment we get above here, it's busting out of here. Look at that. Popped out above it, came all the way back into this one more time. Now I want to see us retest. See that candle closing above there? We talked about that over here somewhere. So look at that level there. Mean threshold, hold it, and go higher. If we come back and retest that level, or this level right here, see how they're overlapping again? That's why I want to say wait for market structure shift. That mean threshold looks good. Yes, I do see that. I do see it, Hadi. I do see it, my friend. There's the retest. Here and here. Right there. Start going higher. You don't want to see it coming back through this wick. You got to start going now. That's fine, 25%. As long as it's not 50. Start shooting higher. Now watch how it's acting. If it's got intentions of going higher, you want to see it really accelerate here. And see how we're looking at precise levels? That should just crank your engine. That mean threshold. Look at that. Just hit the 50% again. So if you were buffering this, stop loss is still sitting down here. You hit 50%, pay yourself. Pay yourself. So you got from here to here, pay yourself. Did the trade again from here to here. You loaded all three levels in there. Pay yourself 62%. Now you're at 50 and you're taking a portion off there. So it comes back to 50 and tags you out, which you're expecting it to do. Anyway. So you got 60% of that trade off now, and you've traded it twice in the same direction. Internal range liquidity with that support, that's a buffered trade, because you're buffering whatever loss you would have taken down here if that reversed on you and came down. So now there's 60, you're at 50, you're 70, you're at 62%. So you caught this trade on the way down with all four different take profit models. You got take profit model 1, paid, take profit model, paid again, paid, paid. So you're sitting at 62 right now. So if that comes back and takes you out at 62, you've still got all this internal range liquidity. That hits 75, you're going to move to 70. So this little stop loss is sitting right here, right now at 62. There's 70, move to 70 or 75. You move to 70. If it tags 70, now you're out. So you've got like 80% of your trade is off right now. You got 20% to run. And we're targeting this box here for box to box, right? Let me just put this here so you can see where it is. Let's take profit model 2, my friends. And if it taps 70%, No big deal. Wait for it to get on top of here and go long again. You're out. What's the low of that candle? 75. Yep, you're out. So that's out of that trade. You're done. So you collected twice in this direction. Now you wait for it to close above that. If you're doing a take profit model 2, you don't care about all this internal range stuff. You start going box to box. As soon as it hits that, you scale out portion here, portion here, portion there, right there. So there's your next portion. That's a box to box trade. So I've given you all 4 models here. I've given you a take profit model 1 here, again here, all the way up to 75%. And it tagged you out there. Take profit model 2 is running all the way into here. There's your second scale out right there. Take profit model 2. This has been a really nice little perfect area. And there's take profit model 3, or sorry, 2. If that one tagged the top of that, you're out there. So you're all done and done. Now you just wait. If it gets back up on top of that, uses that as support, you can get back in long. If it doesn't, it trades back down. You're like, you totally nailed everything on the way. Did we catch an up trade? Yeah, we did. We caught this up trade here. Catch the reversal. Take profit model 1, 2, 3, 4, whatever one you wanted there. Take profit model 1, take profit model 1, 1, 1, 1, 1, 1, or 2 to 2. And then you wait for continuation. That's hunting internal range liquidity, my friends. So I gave you a nice little nugget there in the last hour of so 11:16. This last 30 minutes, I gave you some real good take profit models. Review them. Go back over the video and review those take profit models, and you'll see how accurate they are. And we do like our box-to-box trades. Hey, Hadi. Like, you can't ask for a nicer one than that. And like Hadi says, you got to trust them. You got to trust them. Did gold go up? No. Boy, am I ever glad I got out of that choppy crap. Look at that retracement all the way back down into here. So let's look at gold here and see. There's a little swing here below this low. Not a very strong one. So you want to wait for a market structure shift, right? Which would be below here. So watch this breaker. These 4 or 5 candles, 4 candles here. Wait for a body to break below them right here. And this is the same thing we talked about earlier today. If you see a break below here, we're looking for a fair value gap to form below. And here's our fair value gap. And now I want to see an institutional order flow entry drill, a tap. You don't want to see more than half of this wick. So watch this. When you draw that wick out, there to there, and I'm just going to go equilibrium. Look at it. You see that? That, as Michael would say, is dang nice. No, he wouldn't say that, but it's sexy as hell. Look at that, 50%, boom. Hit it and left. That's the kind of stuff you want to see. Just lovely, lovely, lovely. Okay. Is that right? Yeah, right there. Look at that. Little hair above it, but 50%. And we're still inside this thing. You leave a portion of that open. Institutional order flow entry drill, anything you want. But 50% of that, Michael will be like, I'm entering in there and I'm going to put my stop loss like right above that. I'm so sure that's going to hold. And he would do his masterful stuff with people go, oh, how'd you do that? How did you know what it was that you were looking at? Right there. That's what he was looking at. Anyway. That's what he'd be looking for in gold. That's the kind of thing you look for when you sweep an old low, consolidation, or a SIBI, an institutional order flow entry drill. And you don't want to see that get broken to the upside for sure. And then you're hunting for, what's that little fella down here? Did we ever mention him before? Oh yeah, look at that. Retest. Look at this run all the way back down into yonder fellow and mean threshold. Look at that mean threshold. Ooh, delish. And then change of direction. And then we got a couple of little imbalances along here we could start looking, hunting for. Anyway. That might be it for me, you guys. What the hell happened over here? We swept a high. We got a fair value gap. Remember that? Institutional order. This would have been a nice little institutional order flow entry drill for a premium box right here. Body trades above it. You come back inside it. Mean threshold, stop loss will be sitting here. Body doesn't close below this, so gives you an ugly wick, but still found support in here. Went higher, box to box trade. Here, entered in long, you hit your box, and now you're getting a bit of a reaction off of that. So you're watching right here to see if this level holds and comes lower inside this range. Anyway, it's the same thing over and over again, you guys. Delicious and nutritious. Keep coming. So now remember when you got out right here, you scaled out of your trade, and as soon as you see it pop above that, you say, oh good, now I want to see that hold price. Did we take out this high already? Yes, I think we did. That high on that candle is 73.75. The high on this candle is 74.50. So we took the high. You don't want to see this change with a structure break and getting below here. So I don't want to see this level get taken. So I want to see that act as support, keep going higher now. Remember, this has not been hit. So if we trade below here, I'm targeting this. Yeah, I'm with you, Hadi. I think I'm done for the day. Hello? Shitters. Thanks for tuning in, you guys. As usual, much love to all of you guys. Keep your stick on the ice. Be kind to each other. Violence is not the solution, man. Just talk out your problems. If you got issues, talk them out. Be respectful of one another. It doesn't matter if they're religious beliefs or just general living your life beliefs. Like, we're all going to live our life in a different way to each other. So just respect each other's way of living, man. That's all. Be kind to each other. Life's a wonderful thing. Hold on to it as long as you can. We're not here for a very long time, so just live your life to the fullest. Be kind, help each other out. I'll see you guys tomorrow, bright and early. Much love to all of you guys. Thanks for your time. I appreciate every one of you. Thank you. Like and subscribe if you haven't already done so.